Thanks for coming back to the latest episode of the Credit Clubhouse. We are your one-stop shop for all things credit. Before we jump into our next episode, we have an exclusive offer for our listeners. If you're interested in attending any of our conferences throughout the year, we have a great deal for you. Just head to www.DealCatalyst.io, pick the event you want to attend, and enter the promo code CREDIT at checkout. This will give you 10% off any ticket to any conference. As always, don't forget to follow the show, rate us, and leave a review. We encourage your feedback. It'll help us make these episodes a better listen for you. And now, on to our next episode. Welcome back to our latest episode of the Credit Clubhouse. As always, I'm your host, Todd Anderson, Head of Content and Programming at DealCatalyst. Joining us today and meeting Stuart for the first time is Stuart Cheetham, CEO of MQube. Stuart, I appreciate your time. Thank you for joining me today. How are you doing?
Doing extremely well, Todd. Thanks for inviting me, and great to meet you as well.
Well, thank you very much. So, I wanted to kick off before we get into a little bit more of what MQube does, since you guys utilize AI technology, and AI is probably the biggest buzzword there is going today. And so I'm curious to understand from your perspective. I know you have a history in banking and you started MQube almost a decade ago. How much has AI impacted the mortgage lending market, and what's its been overall its impact thus far, in the space that you guys play in?
So in reality, I'm not sure AI is a word as well, but I'm going to just double check that afterwards maybe. But certainly the most overused phrase. But it's almost zero, I would say, is the reality of it. There's some good uses of AI in fraud, KYC, but they've been used across many industries and for some time, and predominantly quite old, techniques as well. And in reality, at the front end of this, almost zero. And when you get into credit scoring, you don't need AI even today to do this. You need good regression models and stuff like this. So almost zero, I would say.
So, MQube, where are you utilizing AI in your product lending process? Ultimately, how are you guys at least hoping to change that answer from almost zero today to in 10 years, we're like, wow, the mortgage market in the UK is driven by AI?
Yeah, and it was certainly quicker than 10 years. And when I said almost zero, I talked holistically about the market. And not only this country as well, but every market in the world, really. Now, we're distinctly different. So I'm not just going on too much about the business, but when I set the business up, and we went live probably about 7 years ago, we actually raised the first check to start coding. One of our first employees was a data scientist. So we always had this view that we would be heavily AI reliant and we'd build our own. But we built an operator. So I run a mortgage lender, and I also run MQube Technology, which is a software provider selling that tech to big banks and stuff. Now, the reason why that's important is literally from day one, we started using AI in all sorts of different ways around facial recognition and customer journeys, all the way through to document extraction and building on OCR technology and stuff like this. So we went live 4 years ago, and we started, and I believe we were the first people in the UK at least to use AI in a highly regulated mortgage journey. And we used this to effectively extract all information off documents and started underwriting that immediately through that process. And importantly there, and we could do that because it was my lender. I own the innovation journey. I own that risk appetite. Yeah. I decided what went live. I decided what went into production and all that. If I'd gone into any other bank or lender, their risk appetite would have just stopped it from even getting to POC stage. So this is why we're distinctly different. We own the innovation journey, and we push that far more, innovatively and agilely than other lenders would do. So that's where we started. Where we are now is a completely different space, but So we started using it heavily 4 years ago in a real live production environment.
So you mentioned part of that answer was, you sell the technology to banks and other lenders. How do they go from where you just said if you went into a bank you would be, hard to get to the POC stage? How do they today go from, we look at this technology, we might want to use it, we should use it, here's a firm that offers us a way to use it. How do we then get past that conversation into actually implementing that technology?
So there's a very short answer to that, and there's a long answer to that one. And yeah, probably over this thing, the long answer becomes more interesting, I think, because actually the long answer explains why AI won't be so quick to change regulated worlds. But when it does change, it will be a boom. It'll be a massive and almost instant change. So but the short answer is these firms come to us and they go, here is the regulatory requirements and principles about using AI, prove to us you're compliant. And I go, here is my highly regulated mortgage lender that's been doing this and doing hundreds of millions, if not billions of lending, and here is the data to prove it. So I can have a use case here, going through all the auditability, traceability, and I can map it back to all the regulatory requirements and explain to them exactly how it works. And immediately they have insight that they simply would not have generated themselves. That is the short answer. They gain comfort very quickly through that.
Is that part of the reason why you've kind of built MQube, and I'm sure your lender has a different name, but
Yeah,
you've kind of have that, so it's like a built-in proof of concept. You have your mortgage lender, we own the technology, we own the journey, and then part of the reason why we've decided to sell it because we can prove that it works. We don't need to go out to clients or banks or other lenders to try to get them to adopt it, and then we can show it works. You've already done it yourself.
Yeah, I mean, there's some really good analogies around how firms work in this space. But the reality was, first of all, what is innovation and what does good look like in the mortgage market? And how we deem that in MQube is mortgages in 15 minutes. As fast and as simple as buying car insurance. That is what
Wow.
the end game is here. Now, we can deliver that today now. And we're the only people in the UK that can deliver that. And definitely we're the only people that can deliver this at scale. So 97% of our mortgages that are packaged correctly are done in 1 day now. And an average mortgage here is probably 15, 20 days, something like this at the moment. So there is a stark difference between it. But the way we achieve this is we have reimagined the process. And, because I'm a banker, because I know how they work, because I understand I've run mortgage businesses, I knew that people would not buy into this concept of reimagining the whole process until it was proven. So it was almost, how do you take this to marketplace and prove that it works? Well, you need a first customer or you need to do it yourself. And the
Yeah.
reality is the first customer even isn't good enough here because they're still going to have a risk appetite that's too slow, too conservative, will decided by committees, and this simply will not change and let you deploy AI technology fast enough to learn in the right way. So that's why we did it. It's been massively successful because we now hit service standards, which I think it would be hard to imagine another lender in the world, let alone in the UK, kind of matching them.
So if we look at the UK mortgage market today, I mean, I'm here in the US. I have a conventional, at least here in the US, what's considered conventional 30-year mortgage, fixed rate. What does the UK mortgage experience look like? Is it 30 years, 10 years, 7 years, 5 years? I mean, is there a typical product, and does your technology, your lender focus on the typical product, any product? Maybe give us a little background as to what the UK mortgage looks like today.
Yeah, so it's very different from the US. So it's all 2 and 5 year fixed. So everybody refinances very frequently and often. And that's because the liquidity market is very different. So, in the US, the vast majority of loans are securitized and then held centrally, as you
Yeah.
I'm sure you know. Here, banks, it is still a major P&L earner for banks, and they hold them on their own balance sheet. And the liquidity profile of banks here is 4 years. So typically, strangely enough, mortgages match their liquidity profile. So they're quite different in that. Now, so the products are different. Products to us, I mean, the way MQube has built its technology, really what MQube does, it takes any complex, highly regulated journey and makes it real time. Yeah, so it doesn't really matter. We started mortgages, and why? Because it's one of the hardest and most regulated. So we wanted to start in a really hard space to really help really prove out the tech. But we can do business banking or credit cards or whatever it is. But all of this stuff. So what banks have typically done in the past is have got work flow processes. They buy Salesforce, or they buy big software companies like this, and they build a workflow through this stuff, and then it kind of goes one step to one step to one step. But these are kind of dumb systems, really. No one's really doing anything as they move from one section to the other. So what happens is garbage goes in, and lo and behold, garbage comes out. So what we built here, and this isn't really AI, it's more a construct of every single piece of data gets read and assessed in real time. So as soon as you type something in there, we understand. We put it contextually there. Is it a number or a letter? Is that right or wrong? Should the number have 3 digits or 2 digits? We're contextually underwriting it. Then we're actually saying, okay, we're happy with this. Has it passed or failed our appetite for that particular data point? If it fails, we go and ask more information. If it passes, you keep going. But all this is happening in real time. So the person behind the scenes is completely unaware that this is going on, and all of a sudden, new questions will surface in this journey that's completely unique to that journey. So therefore, unique to that customer, and that allows you to package that information and understand that customer journey in the minutiae of detail and completely uniquely to that circumstance. And everything then gets tailored into that process. So immediately, when you have a 2-hour application form, you can condense it down to 15 minutes because you're just going to source independent data and you're asking them to verify and fill in the gaps. And this is what we do at the moment. And then what we use to do that, and this would be the same in the US, is unfortunately in lots of these journeys, you've got to use lots of documents still. And that's because APIs aren't good, or they're simply not API-able for whatever reason. And then so the first proof point here is that we use AI to read the document. So we read a bank statement, and instantly we check it for fraud. We then recalculate the whole thing. We use rules for that. We don't use AI. But then we extract it with AI, and then we create a machine readable object. We put it through the whole process. So within a second, we'll tell you if you've uploaded the right document, if it's the right name, if it's the right month, if it's the right year. And then we'll read something like there's a large transaction, $5,000 or something has come out, and it hits a credit point that says, what is that? And immediately in the journey, the question appears, what's $5,000 for? Now, normally what would happen is that would get submitted in your workflow. It would hit an underwriter a week later. The underwriter would look at this and go, what's $5,000? Send off an email to somebody. Someone gets that 3 days later, and then they say it's for holiday. It goes back, well, is that an annual holiday? And then this ping pong nightmare descends into chaos because you haven't asked the question while people are engaged. Now, so that's what we're doing. That's how we start to streamline this process. What really AI is doing, though, is there are human requirements in that process. Yes, read a bank statement, read a payslip, activate content to a question. That's when we use AI. So therefore, we are taking the human being out of it, allowing AI to interact with it. So that makes that journey real time in that process.
You mentioned the it being the most highly regulated. Have regulators, really understand the power of this technology on this process? I mean, what you explained kind of it perfectly sets the the mortgage process. I mean, I remember doing that myself. It was, there was like a discretionary bonus, and then it's like 5 days later it's explained, there's a document. And if it was in real time, I mean, that would be, amazing, because it would have cut
Absolutely.
down on so much time. But like you mentioned, it being in the most regulated area, how have you gone to regulators and had to explain this? Like,
Yeah.
what has that process looked like, and are they in tune with kind of how fast the market is beginning to change?
So we are regulated. So
Yep.
the regulator comes in, we've shown them lots of this technology, and we show them how we control it. When we show how we meet standards, because we're regulated, we have our own internal risk team. We have a second line of defense, which is every bank and lender has. And this is an independent arm that comes in and marks everybody else's homework to make sure they're not crazy and doing these things. So it's a really, really high standard. And we're quite a unique fintech where we're regulated, using the technology live and in production, and then licensing it out. In fact, I've struggled to find another fintech that's taken this action in a regulated world, and done it like this. And but that's kind of unique for us. And do regulators understand it? The simple answer is no. But the reality is that's not a criticism of them. 99% of people in this world don't understand it, of what's really happening here and what's the real power here. I mean, and I'm definitely in one of those 99% as well, and because this is a hugely complex animal, and that's subtly important, but it's not quite the right question either. So when you sit there, you go to the great analogy here is you've got driverless cars, yeah,
Yep.
and this analogy works everywhere but California. There's always an exception. It's like a mortgage. There's always an exception. But anyway, so what came first, the driverless car or the software in this process? And actually, if I gave you my cool AI and I gave it to you and you went back to your 2013 car or whatever it is, and you just download it, if you could download software into it, and you did, would you expect it to become driverless the next day? And would you then expect it to be safe and compliant on the road? And it wouldn't. Would you put your children in the back? Clearly, all these are obvious answers are no. This is a
Yeah.
crazy analogy, and what's going on, and why is he talking about all this stuff? Well, it's the same, yeah. So literally, if you imagine a car that's literally no more than 10 years old, 5 years old, you couldn't do that. So why do we think all the technology stacks in the financial services marketplace are now built for AI? Why? These are highly complex data problems in a highly regulated world where mistakes are not allowed. It's just like a driverless car. But we expect all of a sudden this tech stack that's probably 50 years old, built across multiple generations with 1,000 different vendors, and it's going to be there and compliant and you're going to be in control. Of course it's not. This is insane. So this is one of the reasons why the usage of AI is slow in regulated areas. It will continue to be slow because there's going to be a massive transformation of the process. Now, your question was around how do regulators get comfortable with this? Well, it's actually saying, look, guys, it's as much about the car as it is about the software. Yeah. So how do I make sure that driverless car technology today is safe? Well, it's in this country, at least, it's hands on the wheel, eyes on the road. And as soon as you deviate one of those things, it forces you to go back into manual. So you've got made sure the human being is permanently engaged, if not actually doing the work.
Yeah.
So this is exactly the same process in a highly regulated marketplace. You deploy technology and you build an ecosystem around it that becomes transparent and auditable, but it keeps that human being element engaged in it, albeit you do significantly less work. And that's our ecosystem. From day one, we built an ecosystem that allowed us to deploy AI in a super fast way, but never to lose control and to always have it transparent and auditable through that process. So this is when you speak to a regulator and say, look, do you understand OpenAI and black box? No, of course you don't. And bluntly, does OpenAI understand all that? And bluntly, no, they don't. So how are you going to use that and control it? Well, you're going to use it in a way that it can't do anything without a human being allowing it to do it. just like a driverless car. But your tech stack has to be designed to harness that capability and to make sure that user, that operator, is always in control. And the problem is that that means all the data needs to be machine readable and accessible in one format. And bluntly, that's not available at the moment. So there's my long answer to the previous question. This is a big problem for the industry, and anybody, any entrepreneur out there or any real tech savvy person, the amount of transformation that will come through the use of AI will be as much within the infrastructure and tech stack as in the actual AI model itself. The change is very fundamental. And this is when it happens, and that tech stack is correct, like ours. So it takes us days to deploy new models. It takes us days to spin up an MVP of a new agent going into marketplace, because we're in control at all times. And this is when you'll see an explosion of the usage of it through that process. But until you've got that foundation right, yeah, whether in the US or Germany or Australia or in the UK, it's going to be a problem.
So then how does the high street bank change that equation? Because ultimately banks, regardless of their their risk appetite, or regardless of fintech's going to take them over, which was initially how fintechs were thinking of banks, and then obviously they realized banks are always part of the system. They're always going to be part of the system. How they're a part of the system might evolve, but ultimately they are regulated. People still broadly trust them to hold their money and keep their money. And so how does the bank begin to, or evolve to join this new tech stack and this evolution begin to happen? Because obviously it's not going to be overnight, but how does that evolve to where we want or need them to be to allow for this technology or other AI uses to begin to solve the problems we want them to solve?
Yeah, and it's interesting you say that. In the US, the biggest mortgage lender in the US is a non-bank.
Yeah.
So it's Rocket Mortgages, yeah. So actually, so typically banks are dominant because they control liquidity and capital, our savings, and the capital to deploy it in a lending thing. And they have these massive moats. It's almost impossible to do that. Mortgage is actually an exception in the US. UK, unless you have liquidity and capital in a big bank. So how will that happen? The reality is they need to control their data, and they need to be holistically controlling their data. And what that means is, and this is a great analogy, is that banks have to learn how to read bank statements. Yeah, because they don't read bank statements at the moment. Now, they might be able to read their own bank statement, and I'm sure pretty much all of them are getting pretty good at that. Unfortunately, in a mortgage, lo and behold, people have bank with other people. Yeah. And then you've got to learn how to read their bank statement. And when I mean that, is actually all that information needs to come over and becomes machine readable. So your database configuration needs to change, and your whole journey needs to be able to change to do that type of stuff. And there's just one simple example, because until that data control is there, how on earth are you going to put an agent live on this? And the best way to think about this is, what is a human being doing in this process? And a mortgage is a great example. As an underwriter, they go on this thing and they just start looking at documents, and they start looking at credit reports, and they look at all this stuff, and they subjectively are taking this information in, and they're able to balance this. And then they're typing lots of notes on the system about this to justify why, Todd, that discretionary bonus was okay because I saw this bonus statement and I checked it was, and they're making all these notes. So this is what people are really doing. And this is, and if you want to put AI to do all that stuff like we've done, you then need to know that that agent can look at all the information just like that human being is doing. But that means it's all going to be machine readable. So there's a change of stack that's required, and a data control that's not there at the moment. And that means a transformation of those stacks through that. And the way they'll do that, I mean, they'll do this in two ways. They will buy solutions from people like us, which will be the fastest and quickest way, hence why we have MQube technology. Or they'll look to augment and build on their own stacks, which will be painful and not impossible to do. There's lots of very clever people and good firms out there that will sell those types of solutions, but it will be intrinsically more difficult to do that because you need one holistic view of data to do this. That is the holy grail of stuff. So they're smart enough to know this. People are waking up to see this now. Agentic AI, which is the really big thing at the moment. So all our mortgages in Empowered are underwritten by agentic AI. I think we might be the world leader in that. I don't know, but definitely no one else in the UK is anywhere near that type of technology through that. And what that means is that we massively have a different cost structure to a large bank. So where a large bank in this country might have 4,000 or 5,000 people managing their loan book or whatever the number is, we will do that with 50, 100 people. There will be a demonstrative difference to this through it. And our experience for the customer will be 10x better through this process. So what that means is that cost saving guarantees bankers will be bankers. You know, what a banker really does is manages his staff headcount downwards to make his cost income ratio go up. You know, that's what a banker really does. That's what I was a banker for a long time. So, and that will drive their behavior, and they will win their business cases, and they'll invest in their technology and improve it to create those data objects like that.
How long do you think we're looking at till, I mean, we're not going to get to utopia in a few years, but like in 5 years, could someone go into a high street bank and get a mortgage in 15 minutes, or go to a high street bank, you know, online and get a mortgage in 15 minutes, 10 years?
So certainly, so to be fair, I mean, you can't go into a high street bank and get in 15 minutes just because you can't get an appointment, normally 3 weeks. But apart from
Yeah.
that, so in 5 years, I would think that will be possible. So we're doing 15-minute mortgages now, but we're not a high street bank, obviously.
Yeah.
To be fair to your analogy, but we have proven beyond any doubt that this is now possible, and we can do complex cases or we can do simple cases. So I think 5 years will be pretty reasonable to do that. I mean, we're re-platforming 2 lenders at the moment. There are 9 more in our pipeline to do software deals. All of them will be able to do 15-minute, one-day mortgages. One day is a more scalable option for these people, all within the next 12 to 18 months. So through this process, so this thing is coming, and so yeah, for sure, 5 years, one person's going to break the ranks, invest heavily in the tech, and then we'll set a standard that will have to be followed. So I think 5 years is probably not bad. Yeah.
You know, a lot of our community are, you know, credit funds and institutional investors. From the funding side, um, you know, how do these loans look more risky? How has the appetite been for, you know, the product, the 1 day or 15-minute mortgage? You know, we've talked a little bit about risk throughout the conversation here. Do the end investors who fund these loans, whether it be credit funds, insurance companies, the like, do they view these loans through a riskier lens? Do they see it as part of the product that comes out, whether it's 15 minutes, 1 day, 2 weeks? How are they viewing these, and how are they, you know, viewing your innovation on this process and this loan?
So this tech is brilliant news for credit funders, debt funds, anybody like that. And the reason for that is typically they don't own the operational footprint, and they're buying the loans through that predominantly anyway. What this means is the cost base is going to go down for these players. So my lender has, you know, 90% of the cost of its equivalent, through that process. So that means I can originate loans cheaper, and I can offer the consumer a better rate, and I can originate more for them. That's a good news. Second good news is if you look at the credit portfolio, so we've got over 1 billion of loans on our platform now, and it's by far, and I can say this because I've benchmarked it, the best performing prime residential book in the UK. Our performance is astonishingly good. And this is because we take more data, we analyze more data, we have a more insightful view of that customer, we have more rules, more checks, more hurdles in that process, than any other lender, and it's done more consistently. So this is not about doing credit light or back to the old GFC where nobody did any credit and just did them super fast. This is about more data, more reasonable insight to make a more informed decision through this process. And that's because machines will do it better. They'll just do it faster, so the consumer gets a faster decision. And lo and behold, because you've automated it, the lender saves a load of money. So this is the innovation that's coming, and it's a win for everybody through this process. And so, and the third reason why credit funds and people like this will like it is because they predominantly securitize, through their process, and they leverage up in their funds through that securitization process. Mortgages, all our mortgages are tokenized onto the Ethereum blockchain. And that means the whole securitization process can be automated and streamlined. So you don't have to go through this mess of data to do this. And you can have kind of real-time visibility of the performance of these loans in a far more efficient way. So, and what's that mean for them? It doesn't mean that they're going to buy less risky loans or more risky loans. What they're going to understand is the risk of the loan better. And therefore they can price it more appropriately. They'll have a higher level of confidence into the insight because the data will be more robust, more thorough, and through that process. So these guys are going to love it. And the niche markets that these guys typically play in, they're always going to be there. Humans are humans, individuals are individual. None of that is changing. And so therefore, all that's happening is that the cost stack is being reduced, not at the expense of credit decisioning. In fact, the credit decisioning, we would argue, will improve through this process. And then the operational flow to securitize will also be automated, again, reducing the cost stack for them. So these guys are going to love it.
I mean, ultimately, what AI unlocks is an infinite more amount of data than a human can look at and say, oh, here's a bank statement, here's a discretionary bonus piece of paper. It takes all that, amps it up by 1,000,000 or 100,000, whatever the data points are, and gives you a more realistic view of 1,000,000 data points versus 100 data points, and then putting it on the blockchain, securitizing it. They can look at it in real time and know the risk of their portfolio versus an Excel spreadsheet or someone inputting incorrect data. It makes it faster, the data more complete, and then the view of it in real time. Am I kind of getting the pieces of that correctly?
Yeah, absolutely. So, I mean, let's go back to my very sarcastic but unfortunately true analogy of banks need to learn how to read bank statements. Yeah. So why didn't they do that? Okay, it sounds a stupid thing to say, but it's true. But why didn't they do it? And it's not because they don't want the data. It's the operational inefficiency it creates. So what happens in the process today? You take all this data and you give it to an underwriter. Oh my God, the underwriter is going to read it and it's going to slow them down. They're going to take more time and the cost is going to go up. So, hey, we're just not going to do that. We're going to find other ways, suitable ways to make reasonable decisions in this process. But let's reimagine that for a minute. Let's say there is no cost in this. You can look at all that data and now AI, as you just described, can just go through all that and give you a position. Well, what I'm going to do now is I'm going to take all that data. Of course I am. I want more data now because I want this to be as informed as possible. And also, if I'm going to do that, I need to do that because that means my agentic AI capability is more secure because I'm giving it a holistic picture. So therefore, the likelihood of them making unbiased or false extractions of that becomes lower and lower because the data is richer and fuller. So you're absolutely right through this process, but they just actively haven't wanted to do it for the very reason of that cost structure and operational flow.
So before I get on to a few fun questions, one last question before the fun questions. You're almost 10 years into the journey. I think you guys started in 2016. Um, what made you kind of want to take that leap to start your own company? Was it the inefficiencies you saw as a banker? And then secondly, has the vision changed, evolved? Kind of what does it look like today versus when you guys were just starting?
So I met my business partner as I was leaving Lloyd's, and we said to ourselves, let's build a business. We looked at the market and said, what's particularly bad? And if there was any blue ocean in the fintech world, we thought that was mortgages. And we looked at mortgages and said, why is that wrong? And it's because it's done on a workflow basis. So when I landed in Hong Kong and ran a mortgage business, and the app to offer time was 28 days. And like every good CEO dropping into a bank, what I did is, I'm going to fix that. And what I did, I got my crack team on that and said, take that 28 days down to like a week and just tell me how to do that, because, I'm such a forward, innovative and unique thinker. And then 4 months later, they come back to us and said, actually, we've added 2 days to that. And I said, what's gone wrong? He said, well, actually, we found out we weren't doing it very well, and we've made all these mistakes, and the regulator's going to tell us to go back. Because this team is brilliant, by the way. This is not the people. It was because, as every other CEO, I came in there thinking I knew the answer was obvious, and I was fundamentally wrong. And what I said to them in reality, I said, standardize this process to one best way. And that is completely the wrong mindset. It is absolutely create a non-standard process that individualizes in every single case. And that is a completely different mindset. And as soon as you realize that actually every individual needs to be treated individually, you can then start to create a system. So I knew all this stuff coming out of that. And we looked at mortgages and said, let's do that stuff. And our day one vision was 15-minute mortgages, and it has not changed. The only difference is we've now delivered it. There's lots of things that have changed in that process, and we have pivoted and learned lots of other things. The vision is not one of them.
So we have a few fun questions to end our episode here. Do you have a favorite sport team or hobby?
Well, I am a massive Liverpool football fan. So I was a season ticket holder with my mum, my dad, and my brother for nearly 2 decades before I had children and I moved abroad. So yeah, so that is, if it's an obsession, it's a religion in my family. So
Well, my father-in-law is a Liverpool fan, so
oh well, he
he'll
seems a
be
very
happy to know
sensible
that.
guy. He's a very sensible man. I like him already.
Tell us one surprising thing about yourself.
Yeah, one surprising thing. Actually, do you know what? I saw this before and I couldn't think of anything. And I was literally on with my business partner. So I don't know how to answer this question. What's one surprising thing about me? And he said, Stuart, it's obvious. And he told this story back to me. I self-educated myself in I didn't homeschool. I self-educated myself to do something called A levels here, which is after high school and before university. So I went to school and I was a person that maybe rebelled a little bit against the academic structure or any structure in life. And so one day I announced I was leaving school, and I took myself to a library and I self-taught myself all my exams and passed them all in pretty good grades. So that's
Interesting.
there's an interesting weird fact about me.
One book you'd recommend, someone from the audience to read.
Well, again, so people probably come up with like self-learn books. So I actually, about start of the year, actually, I changed a really big habit of mine. I said that less screen time and less sort of that sort of thing. So 9:30 every night, I switch everything off and I read. And I read paperbacks now. I don't even read Kindles or my iPad. It has to be paperback, so I reduce my screen time, stuff like this. And I don't read anything that work related either. Because it's completely switched off time. And
Yeah.
this is about getting better sleep and mental health. So my one book for you is I Am Pilgrim by Terry Hayes. Terry Hayes. That is an awesome book. Very distracting.
I have a sense of how you're going to answer this question, but the most exciting part of your job.
What do you think? What do you think I was going to say then? I'm quite intrigued by your intrigueness there.
Well, I mean, the 15-minute mortgage, the fact that you can deliver something to someone in real time, that aspect of shifting and changing the mortgage market, or even just the process, to me seems exciting, but I could be wrong.
Yeah, no, that's a good point actually. No, I wouldn't have said that, but it's a pretty good answer actually. No, do you know what it is actually? It's not even signing massive deals either. Like you sign a massive deal and it's cool and it's taking years to do it. You know, we have built a team of incredibly intelligent, engaged people. And what is the best thing about it is when someone surprises you, and it happens frequently here. They said, you know what? I had this idea, Stuart. I just did it and I put it into pre-production and come and have a look at this. We should promote this now into production. And all of a sudden you look at this bit of tech and this bit of change and like this 23-year-old has just dreamt up this idea over the weekend, coded it up, plugged it in, tested it, and you know, wow, that's changed. It's changed this thing. How have you done? This happens so frequently in this business. So the people and working in the freedom of it is incredible. They do stuff that I can't imagine. So that's probably why. That's why I get a kick out of most.
And then final question, one prediction for the next 12 months.
So, you know, as overhyped and as underhyped or wrongly hyped AI is, and is wrongly hyped, and 99% of people use AI in context that makes no sense, really. Oh, AI will do that. Well, what does that mean?
Sure.
AI is a thing and it does certain things. So my prediction is this year there will be one major error made by a business with AI, and it will set back the usage. People are overly confident about what AI does already. Everybody is already on ChatGPT and Copilot or Gemini or whatever, and they're chucking in data that you won't believe, and they already think it's perfect, and they have absolutely no understanding of that, and all those have zero control framework around them, and people are going to get overconfident and they're going to deploy, and people are going to get it wrong, and this is going to have a big impact, and it's going to put the industry back. People are going to regulators going to come in or things like this and step in. So this in the next 12 months, we're going to see one really big fundamental mistake that will impact the whole industry.
Long term, though, isn't that in some ways a blessing in disguise? Because then it kind of forces people to say, hey, maybe we've let the technology run out too far. We need more human checks. We need more. And regardless if a regulator forces them, businesses tend to adapt to something they see a competitor do or someone in their field does and says, shit, we should have been doing that the whole time. We should check ourselves a little bit more closely. So it might be painful in the short term, but in the long run, wouldn't it be beneficial?
Yeah, I mean, it's almost it's a statement of obvious and inevitability, really, with almost any massive tech thing. So you are right, and there are growing pains with this. So I mean, ultimately, it will be a good thing. People will, so every time, and it'd be interesting your view on this actually. Every time I read about AI, and every time I talk to people about AI, and I get asked to do these things, everybody's talking about this AI model or pipeline. And it's a bit like they're talking about the software. No one's talking about the car it's deployed in. Everybody seems forgotten. Everyone seems to think they're just going to plug it in. It's going to have this massive impact. It does. That's the scary bit. And then they think it works. But no one talks about the car and the ecosystem. And I think this is what's going to come out of this more. The learning is going to be actually the AI we have today is powerful enough to probably automate half the world's jobs or something ridiculous.
Yeah.
But the problem is the infrastructure and tech stacks are just so far behind, you can't do that. So I think the conversation changes, away from this to more around how actually do we control and use it, make it transparent and make it auditable and things like this. And that's the conversation I don't really hear happening unless I go into the really techie tech ones, but these guys have got it. They understand the problem. There's almost no IP in AI.
Yes, it's all this like surface level understanding and conversation, and nobody's, unless like you said, those that fully understand it and grasp it, which is very few people these days. It's a buzzword. People use it to bump up valuation. People use it to sound smarter or feel smarter, and in reality, that it probably needs an event for something to go wrong for people to start rethinking.
Yeah, absolutely. And it's inevitability to that. There's going to be the two things that will drive this change in the regulated world, at least, will be one, something like that, and that will have a backward step, not necessarily a bad thing. But equally, what will happen is somebody will look at the marketplace and go, I'm not competitive anymore. I need to take a different risk approach to this. And they'll use it. They'll massively reduce their cost base. They'll reduce the price of their product, and they'll still a huge market share.
Yep.
And that means followers will come in fast and quick to this process. And again, people will make mistakes then as well. This is the dramatic nature of what's likely to happen over the next 12, 24 months. This is I don't think we're predicting anything here. We're just stating obvious things.
Some pretty obvious things.
Can't tell you exactly when it will happen, but it's going to happen and stuff like that. So prediction for the better prediction would be people will start talking about the tech stack and the ecosystem more and less about the AI. And those are the people that will actually be able to use it and extract benefit from it, because they actually understand what's required in a highly regulated world. Yeah. In a complex area, how actually this stuff will come to market.
Well, on that note, Stuart, I appreciate you spending at least a few minutes with me today. Thank you very much for your time. And, for anyone who doesn't yet know, Stuart's going to be joining us at our UK Mortgage Finance Conference as one of our keynote speakers. So if you haven't gotten a ticket yet, please make sure you do so, and you can see Stuart on stage at that event. Stuart, thank you very much for your time today. Lovely to meet you, at least virtually, and, continued success to you and the team.
Yeah, thanks for inviting me. Great to meet you, Tom.
Yep, you too. Thanks for coming back to the latest episode of the Credit Clubhouse. We are your one-stop shop for all things credit. We have an exclusive offer for our listeners. If you're interested in attending any of our conferences throughout the year, we have a great deal for you. Just head to www.DealCatalyst.io, pick the event you want to attend, and enter the promo code CREDIT at checkout. This will give you 10% off any ticket to any conference. As always, don't forget to follow the show, rate us, and leave a review.